We are closer to 31st March and I'm sure most of us are rushing either to make tax-saving investments or ensuring that we take note of deductible expenditure which can be claimed for FY 21-22, expenses we made or will make during the year and which can be set off against our income. We all know that effective April 2020, we can either choose the old regime with higher tax rates and allowance for deduction and exemptions, or the new tax regime, which is the lower tax regime with no exemptions or deductions. So before I talk about the last minute investments you can make, let's list out the expenditure that can be claimed if they are made before 31st March 2022, because we often miss out on expenditure already made. Now first, health insurance premium. For this, one can avail deduction under Section 80D for premium paid towards self, spouse, children and parents. One can claim maximum deduction of 25,000. And for premium paid for parents only, that is senior citizens with age 60 or more, deduction is capped at 50,000 rupees. Now let's go to the real estate space. So when you take a loan and repay the principal, this qualifies as a deductible expenditure under Section 80C. We all pay for EMIs on loans. The principal part of the EMI paid partially or in full qualifies for deduction. And taking this point forward, let's talk about the interest component in that EMI, which can be claimed as a deduction under Section 24 and the maximum amount allowed is 2 lakh. Now remember, this benefit is delayed for under construction properties, but one can claim it once your property is completed. Additionally, you can also claim deduction of 1.5 lakh under Section 80EEA. This is for interest on loans up to 31st March 2022, and this is for homes priced up to 45 lakhs, that is affordable housing. So if you take this loan after 31st March 2022, this exemption will not be available. The other expense you might have made and can claim in the year is the education loan. The interest paid on education loan for self, spouse, children qualifies as deduction under Section 80E. But do remember, loan has to be taken from scheduled banks in India and notified institutions. Additionally, tuition fees for 2 kids can be claimed as deduction under 80C. Also, we can add EPF to the list, which is not largely an expenditure, but it is a part deducted from our salary. This is the deduction maximum of us avail under Section 80C. Both employer and employee contribute 12% of basic salary towards EPF, and the other positive is that the interest that you get on EPF contributions is tax-free. So the interest rate on EPF keeps changing every year. But if an employee contributes more than 2.5 lakhs to EPF, interest on excess contribution is taxable under income tax laws. Well, that was a long list of expenditures, and there are many in the subheads which we will cover later. But these are the most basic and obvious ones. Let's now talk about investments that can be made if you have not done enough expenditure. First one, National Pension Scheme, where you can claim a deduction of 1.5 lakh, and this is over and above the 80C investments that one can make. In another episode, I will explain how NPS works in greater detail. With that, let's move on. Equity Linked Savings Scheme or ELSS is the other investment that you can make and you can claim it under 80C. Now, these are basically mutual funds that are linked to equity markets. So, the market moves define the return value. The lock-in period for these investments is 3 years, and if you get dividends here, they are also tax-free. ULIP or Unit Linked Insurance Plan is the other scheme in which a lot of people invest, which is admissible under Section 80C. Now remember, the lock-in here is longer, that is 5 years. But the investment list under Section 80C is very long. Listing some of them for you: National Savings Certificate, Public Provident Fund and Sukanya Samriddhi Yojana. These are some of the investments under this particular section. Most important to remember, the overall deduction one can claim under Section 80C is just 1.5 lakh. So yes, there are many options available under this section, but there is a limit to how much one can actually claim. Here's hoping your tax planning is efficient, and we'll keep analyzing and updating you with more updates in the tax space.